Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. First, I'd just like to send my condolences to the Tesla bears, short sellers, everyone who sold the stock, and everyone who's still waiting for the stock to dip. Rip you. Anyway, let's move on. Tesla just announced mind-blowing Q2 production and delivery numbers, and the stock has gone vertical as a direct result. I'm not surprised, but Wall Street was. Fancy that. In this video, I'll talk about what it means for Tesla's Q2 earnings, profitability, possible S&P 500 inclusion, impact on the stock price, and more. If you own or are interested in Tesla stock, stick around. To those of us with our finger on the pulse, Tesla's whopping production and delivery numbers were inevitable, but to the wider market, they were a huge wake-up call. Yet some are still sleeping. Tesla's Q2 financial results, however, will wake the last of these slumbering laggards. The numbers will be impossible to ignore. In the midst of a global pandemic, with its US factory forcibly and wrongfully shut down for over a month by an overreaching and incompetent Alameda County in direct defiance of federal instructions that clearly stated that they and other essential manufacturing businesses were to remain open through the shutdowns, a shit show that ultimately ended with Elon Musk filing a lawsuit against the county who quickly backed down, Tesla knocked it out of the park, producing a whopping 82,272 vehicles and delivering 90,650. This during a global pandemic with its biggest factory shut down for a significant part of the quarter. Tesla's year-on-year deliveries are down just 5% compared to GM down 34%, Toyota down 35%, and Fiat Chrysler down 39%. This is hugely important, and I hate to be that guy, but this is exactly what I predicted would happen back in March. Repeatedly, in fact. Tesla is gaining market share relative to other automakers, and we're discovering underlying demand is far greater than production. So, let's look at what's in store and what to look out for when Tesla announces Q2 earnings in a few weeks. Hey guys, want to help out the channel and get up to 2 free stocks? Check out the links in the description to WeBull and Stake. Unless you don't like free stuff, that is. Let's get back to it. Factory shutdowns. The big unknown leading into Tesla's Q2 results is the financial impact of having its factories shut down and suppliers impacted, then having to ramp production back up to pre-pandemic levels, which Tesla confirmed they've already achieved. I'm way out of my depth even predicting the costs involved here, so I won't try, but it's worth keeping in mind. This isn't a typical quarter. Production and deliveries. It's incredible that Tesla produced over 80,000 vehicles in Q2 despite its largest factory being shut down for almost half the quarter and managed to deliver over 90,000 vehicles amidst major logistical challenges. Wall Street, who, let's be honest, have no fucking idea about Tesla, were expecting deliveries of just over 70,000. Tesla beat that by a third. And as we know, the stock responded accordingly, jumping 8% on the news. Product mix and profit margins. Given Tesla's improving margins and the Model Y's recent release with many high-spec performance versions finding their way to customers, plus the much more profitable made-in-China Model 3s, I expect we'll see strong margin growth despite price cuts. Margins are key to a profitable quarter. Speaking of, here's billionaire stock investor Ron Barron late last year discussing Tesla's Q2 2020.
So I guess about 3 or 4 or 5 months ago, he said, Ron, next June, that's the time. So I've been an investor for 4 or 5 years, made relatively modest returns. And then he says, next June, that's when everything comes together. That's when we have the Y. The Y, he said, is going to do as much volume as the X, S, and 3 altogether. This one new car. So that one new car is going to do as much volume, and they're going to make initially the same margin, but ultimately a much higher margin on that than they are on everything else.
Sounds promising, right? Cash on hand. Tesla ended Q1 2020 with over $8 billion in the bank. That's billion with a B. Enough for them to build a handful of new gigafactories. At the same time Tesla is flush with cash, other automakers have drawn on tens of billions in lines of credit to survive the downturn. Meanwhile, Tesla is expanding aggressively with construction of its Berlin Gigafactory moving ahead faster than the approval process can keep up, massively expanding its Shanghai Gigafactory and ramping Model Y production in the US. Despite this, I expect Tesla to remain flush with cash moving forward as they're becoming exceptionally resourceful with capital expenditure, driving down costs with scale, improving their processes, finding new efficiencies everywhere, and generating free cash flow at will. Full self-driving revenue. Tesla has hundreds of millions of dollars in deferred revenue from the sale of full self-driving. As new features are rolled out, more of this revenue is incrementally recognized. How much will fall in Q2 is anyone's guess, but with stop sign and traffic light recognition rolling out in the quarter, it will be more than $0, and because it's pure margin, it will go straight to the bottom line. This could make or break the quarter. Zero emission vehicle credits. This is the most exciting and unpredictable piece of the Tesla pie. Let me refresh your memory. Legislation is forcing automakers to produce a certain percentage of zero-emission vehicles or face colossal fines. Each of these vehicles gives them a credit. Enough credits and no fine. Not enough credits? Huge fine. Problem is, making EVs is kinda hard, kinda expensive, and takes time. And the recent pandemic has set back the already lagging industry further, many of whom have abandoned, scaled back, or paused their electric vehicle programs simply so they can limp into next quarter in one piece. Enter Tesla, who for every vehicle they produce, score a ZEV credit which is worthless to them but of great value to others. This matters. It's like every vehicle Tesla makes comes with a pre-packaged pile of cash Tesla can bank in the future. ZEV credits are basically a waste product of Tesla's business. Fiat Chrysler has an agreement to purchase more than $2 billion in ZEV credits from Tesla between now and 2021, with about 80% of those expected this year. Q1 saw regulatory credit sales of $354 million. Some quick back-of-the-napkin math implies another $1.2 billion of pure profit coming to Tesla throughout the remainder of 2020, just from their Fiat Chrysler deal. Who knows if Tesla has agreements with other automakers too? If they do, this could massively surprise to the upside. Tesla is using profits from the sale of ZEV credits to build new factories. Giga Texas, anyone? Solar deployments. In early December 2019, the following email from Elon Musk stating Tesla's top priorities was leaked. The first is making sure all cars are delivered to their customers before end of year. The second, just as important, is that we immediately increase the rate of solar deployments by a significant degree. Overnight, the Tesla homepage was updated, removing Cybertruck and Roadster from the main navigation and replacing them with solar roof and solar panels. More recently, Tesla revamped their entire website, making solar the default product on its homepage. This is an incredibly important data point. Tesla is very serious about solar. Further proof? Tesla reached weekly production of over 1,000 solar glass roofs in Q1 2020 after aggressively hiring in the months prior. Who cares about solar, you say? Dude, the average price of a solar glass roof is about the same as a Model 3. Seriously, don't sleep on Tesla solar. It's a future growth driver. Battery deployments. Tesla's battery business is by far its lumpiest. In part due to its relatively small size, and in part due to the nature of its batteries, which range in use from powering single homes to powering entire islands. Tesla's grid-scale megapack was announced in mid-2019, and it wasn't long before we heard about its planned use in a number of projects, including the replacement of some fossil fuel peaker plants. Big batteries equal big revenue. This one is very hard to predict given a single contract can account for double-digit revenue on the storage side of Tesla's business, and how heavily they're pushing commercial applications. But the trend is up, and this one is worth paying attention to. Keep in mind, 40% of Tesla's solar customers also buy at least one Powerwall. Elon Musk expects Tesla's energy business to grow as large or larger than its vehicle business over time. Q2 2020 will give us a peek into their progress. China. Tesla's most important market is China. It's the world's largest automotive market, the world's largest electric vehicle market, and the Chinese government is bent on transitioning their country to sustainable transportation as soon as possible. And despite the entire world ending recently, China barely missed a beat. Gigafactory Shanghai is effectively fully ramped, pumping out thousands of high-margin made-in-China Model 3s for consumers who can't get enough of them. Meanwhile, Tesla is basically doubling the size of its China factory with construction of its Model Y production facility, which will add annual output of close to 200,000 vehicles, currently underway and expected to be completed well before end of year. Yes, the first highly profitable Model Ys will be rolling off production lines in China before the end of the year. Suddenly, Tesla's China production capacity will be approaching 400,000 vehicles per year. Any China-centric updates Tesla provides in their Q2 results will be incredibly important. We know Tesla China is moving at a stupendous rate. Just how stupendous will be revealed in a few weeks. Good news and bullish guidance will be a boon for the stock price. That is, if the stock market actually gets it. And while it's important to keep tabs on Tesla's China progress, it's equally important to see what other foreign automakers have to say on their China plans, or lack thereof. Tesla is racing away with the world's most important EV market. Will anyone even try to catch up? Guidance. Last we heard, before the pandemic, Tesla was highly confident in comfortably exceeding deliveries of 500,000 vehicles, and I'd quietly expected Tesla to come closer to 600,000, if not surpass it. In Q1 2020, guidance was suspended, but Tesla promised an update in Q2. While Tesla has a better idea than anyone when it comes to demand for their vehicles, I will go on the record. I do not expect Tesla to change delivery guidance. Sure, they won't deliver as many vehicles as they could have without the global shit show, but I expect Tesla will still be aiming to deliver well over 500,000 vehicles this year. It won't be easy, but since when did that stop them? If full year guidance remains unchanged, this too could be a big plus for the stock. Will Tesla post a profit and gain S&P 500 inclusion? The multi-billion-dollar question, will Tesla post a Q2 profit? It's blindingly clear now that Tesla is a self-sustaining business. Long-term profitability is no longer a possibility, but an inevitability. However, Q2 2020 is of particular importance. Should Tesla post a profit of any size, even $4.20, it's likely the stock will take off once again. While strong delivery numbers have already sent the stock soaring, there's an even bigger catalyst for Tesla's stock, S&P 500 inclusion. To be eligible, Tesla needs to post a profit of any amount. Should they do this, funds who match and track the S&P 500 index will have to buy Tesla's stock, many billions of dollars worth. This is likely to put intense upward pressure on the stock price. Moreover, should it happen, the very fact that Tesla posts a profit and enters the S&P on the back of a globally catastrophic quarter will put to rest any possible doubt over the long-term viability of the company. I mean, really, you would have to be about 100 IQs short of average to harbour any doubt about Tesla's future after that. So, will Tesla post a Q2 profit? Let me check my crystal ball. Oh fuck, it's broken. I suppose I'll have to guess. Well, if I were a betting man, I'd give it far better than even odds. In fact, I'll be surprised, but not disappointed, if they don't. After all, ZEV credits, full self-driving revenue, currency fluctuations, and costs associated with shutdowns could swing things $500 million either way. But I tell you what, I wouldn't want to be waiting on the sidelines expecting a loss and hoping the stock dips. To me, that's just playing with fire. My highly scientific gut feel is that after Tesla posts Q2 results, even the most skeptical bears, excluding those who suffer from mental illness and/or inferiority complex, will find it impossible to doubt Tesla any longer. Think about it. A global pandemic, a once-in-a-decade economic downturn, forced factory shutdowns, huge declines in new vehicle sales, a massive contraction, and yet Tesla, of all the so-called automakers, carried on like nothing even happened while everyone else got wrecked. Moral of the story? Don't bet against Tesla. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Don't forget your free stocks with WeBull and Stake. Thanks so much for watching. Let me know your thoughts in the comments below. What are your Q2 predictions for Tesla? Will they post a profit or loss? How much? Is S&P 500 inclusion inevitable? What will happen to the stock after Q2 results? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like to access exclusive videos, regular Q&As, behind the scenes content and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description, and you can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.
It's very unwise to be shorting Tesla. There's a tsunami of hurt coming.